Welcome back to Investing with Confidence. I am your host, Joshua David, having a good time talking about how to use the financial markets. Now, that could be stocks, options, futures, or Forex for income potential. Now, that could be during your working years. We'll call it the younger days, but also the
Mhm.
happy days. This is a happy days show today. During retirement, having that potential with 401ks and even IRAs. If you happen to miss two tickets for that investing class that we do right here in Bloomington, call 952-814-4410 or text the word invest to the number 484848. Click the link that you get right back and pick a date. When you do that, you're going to receive a financial quick start kit. And a lot of people love these investing classes. I ask people why you came in, and they say it's because it was a physical place to learn
Great.
about the financial markets, and especially in retirement accounts. Al, you want to talk about 401ks, especially old 401ks, because I think a lot of our listeners have a 401k with a past employer,
Great.
and it's just sitting there. I mean, we have conversations all the time about people having these, and they just let them sit there, and they don't know what's happening with them. But really, that's the most risky thing you can do. So talk about what are some of the things that you might be able to do with an old 401k if you have one there.
Yeah, and a lot of people have multiple 401ks somewhere out there, and they have no idea what's in them. And when you think about it, when you go into retirement, your lifestyle is going to be based on what you have in those retirement accounts and how you use them. More importantly, how you use them than what's in them. But here's some of the reasons that leaving your money when you retire or when you leave a company in that employer's 401k is not a good idea. Because when you look at your portfolio value, you have to remember that a good part of that number is based on what you contributed and what your employer contributed. That's no longer the case when you retire. So now you've got money in a portfolio that is having part of it sucked out on a regular basis. Fees are being taken out of it, even though you're not really participating. You're not putting more money in, but fees are being taken out, management fees, plan sponsor fees, and you're actually in something that only will benefit you if the market goes one direction. They're one directional. The market is three directional. It goes up, it goes down, it goes sideways. If you take the money from that 401k, those old 401ks, and transfer them into an IRA, into either a regular IRA or if you can into a Roth IRA, then you have choices. You can participate potentially beneficially in all three market directions. You have a much better way of protecting the assets. You can have what is essentially an insurance policy on your retirement accounts. Now, think about this. If you were in the market in the year 2008, and some of you probably were, you might have lost 40 to 60% of the value of your retirement assets. What if you could have protected that? Because in March of 2009, the market started this march upward, which has resulted in the biggest, longest bull market that we've ever had. Well, a lot of people weren't able to participate in that because there was such a drawdown in their retirement accounts, and they had to utilize that money. So by the time the market turned around, they didn't have enough to really participate in again. So they missed out on that. Will that happen again? Look, we have gone a long period of time here without a major correction. The markets always will go through something like that. That shouldn't be a concern for you, because if you know what you're doing, if you have the right education, the right knowledge that will show you how to protect your assets, that becomes an issue that isn't something you need to be concerned about.
Yeah.
If you have an education that shows you how to take advantage of the profits that you have, again, that's going to have you end up with a portfolio you can rely on in retirement that's probably going to let you live a better lifestyle. That's the goal. And if that's your goal, there are things you can do to help to achieve that goal. Making your own choices in a self-directed IRA gives you, as Josh mentioned, the ability to trade futures, Forex, options. And don't worry if you don't know about those. The reason you don't know about them is because no one has taught you. It's like anything else you do, it's the fear of the unknown that is the real concern. That's what we do. We teach you how to look at, and first of all, you need to find out which one of those might be more appropriate for you. It's what is the right choice for you. Simplify things and just concentrate on what's best for you, and then make sure you have access to the right education to help you not only get the knowledge, but to build the skills to use whatever that choice is.
Yeah, you were talking about old 401ks with a previous employer. I mean, think of it this way: if you have two wallets, I'm gonna kind of paint a picture here. If you have two wallets or a billfold, whatever you want to call it, and they both have retirement capital in them, one of them has, let's just say they both have $100,000 in each wallet, or maybe you have 500,000 or $1 million in your retirement accounts. It doesn't matter, but let's just use the example of 100,000 in each one. But you know what? This old wallet anymore, you just don't want to use anymore. So you set it aside and you put it next to maybe one of your kids' your kids' room or something. And what happens? They start taking a little bit out of it, right? Because it's an old wallet. It's just sitting there. You don't do anything with it. They're taking a 20 out, a 50 out, a 100 out. That is the same thing as fees in an old 401k. You're still paying fees for an old 401k that's just sitting there doing nothing, at risk to the market, at risk to maybe that child, like I was giving the example with the wallet, taking out a few bucks at a time till eventually there's a potential it could be gone at one point, especially if the market's down. So that's why it's so imperative to protect your life savings. If you're not protecting that, what is the plan, right? And you got to ask yourself this too: what is your account doing? Market's actually up roughly about 20% on the year. If your account isn't at or near that,
Right.
there's a problem there. So if you don't know what your account is doing, maybe it's time to start knowing.
Yeah.
Al, you talk about that in these investing classes. Is what is your account doing? How do you have the potential to utilize or maybe maximize your potential with, as you were talking about, futures, Forex, options, the different techniques to utilize those during your working years to have the potential to speed that up, or during retirement years to protect and have the potential to continue to grow. So call 952-814-4410 if you want to learn more about 401k techniques and strategies, or text the word invest to the number 484848. When you register for this investing class that we do here in Bloomington, it's a physical class to learn about this. You get a financial quick start kit just for attending. There's 3 retirement strategies that Wall Street doesn't talk about in there. Call 952-814-4410 or text the word invest to the number 484848. So Al, with protecting retirements, people don't really know that you can do that. So let's just say somebody does have an IRA with a broker or something, or an advisor, heaven forbid, right? But they want to have better opportunities in the markets. Is there a way? Can you take that away from a broker and an advisor and manage that yourself, or do you have to have that in there? Because they're probably saying you need your trusted advisor. You need this financial advisor. Do you need them?
Well, that's part of what Wall Street has done a really good job of, is conditioning people to believe that this is too complicated for you to do. You need somebody to help you. You need someone to hold your hand through these market corrections and these market crashes. I don't want someone to hold my hand during a market crash. I want someone to show me, hey, the market was down, but you were up. And here's how we can protect you. And you can ask your advisor, what are you doing to protect my assets right now? If we go through a bear market, which is a 20% or greater drawdown, the last big one we had in 2007 to 2009 was 57% on the S&P 500.
Well, especially this past week, Al, it was down about 5%.
It was down about 5%. Right.
Are you not protecting your assets, or are you? And that's where you can do that yourself.
Yeah, you do not have to ride these down. You can have protection. You can have a like a safety net on your portfolio. So when the market goes down 4 or 5%, you're not going down 4 or 5% with it. Because you remember this: in order for you to have any kind of profit, you have to build back. You have to kind of fight back over what you just lost. In the year 2020, the market was down 34% in March. Well, your portfolio had to grow 52% just to get back to where you could start making a profit.
You know what that sounds like? Taking one step forward and four steps
backwards,
and one step forward and 4 steps back. So people are doing it the wrong way. How do you self-direct? I mean, you can just take that and just say, hey, I want to manage my capital and I want to do that with confidence, right?
Right. Yeah, it's your money. You can self-direct it. All of the major firms out there now will let you set up a self-directed IRA or just an investment account that you control. You don't have to pay somebody to have your money sitting in a portfolio. like you do in a 401k or a 403b. So you can self-direct. There's no fees there. You have access to a number of different assets and strategies that you can use in addition to protection and in addition to being able to benefit if the market goes down. The normal part of the market is to have corrections. We always have had that. We always will. And those are great opportunities if you know the strategies to participate when that happens. And we teach these in these classes. Shorting is one. We'll go over that in the class. Using a particular option strategy is another. Using what we call an inverse exchange traded fund, which is a basket of stocks that go the opposite direction of the underlying index or sector. And there's three right there that you can use to benefit potentially in a down market.
Those are great opportunities, Al.
Yeah. So ask yourself, what are you doing now? If the market does go down, let's say we end up going through a 10, 20% correction. What are you doing? What do you have access to that will help you participate?
Yeah.
We'll show you how to do that.
If you're planning on retiring in 5 years, or maybe you're thinking, hey, in 10 years, I want to be able to dial back a little bit or slow down my working years. Well, what if it doesn't come back? What if it doesn't come back at that time? That's why you want to learn those techniques and strategies now before that happens to protect your life savings so you don't go into retirement just living off Social Security, if that's even going to be there when you do retire. If you want to learn more about how to protect your assets, how to protect your life savings, and have the potential to grow it using different markets or even self-directing, you got to come into one of these classes. So call 952-814-4410. We got a class going on right now. A lot of people in there learning about the financial markets, just saying, hey, I want to learn more. How can I take more control of my capital? 952-814-4410 or text the word invest to the number 484848. Al, what's next?
Well, let's keep it simple. Let's just talk about some of the things that are keeping people from achieving their full financial potential.
Sounds good. How can you get out of that rut, though? How can you have the potential to reach those goals? 952-814-4410 for 2 tickets for this investing class right here in Bloomington, or text the word invest to the number 484848. We'll be right back.